Prudential has been in the life insurance business for a long time. They've also been in the financial services business for a long time. They have had ups and downs, and especially with interest rates going up and a pandemic, their business was not in a great place a couple of years ago, but they have really bounced back. I'm going to be analyzing Prudential in this video and showing you my analysis and determining if this is a good buy or not. My name is Victor. I have an MBA, a lot of business experience, and I use that experience to analyze companies and share that on YouTube. Please do me a big favor and like my video and subscribe to the channel. Now, let me tell you more about Prudential. When I look at a stock, I take it through a process that involves 4 questions followed by a decision to buy, hold, or sell. I first want to know, do I want to be an owner in this company? Do I like the industry? Do I think their management team is operating the company well? Do I think debt is less than 3 times EBITDA and therefore debt is very low? And I want to discount the stock because I want my investment to go up over time. The best way to do that is to buy a stock that's discounted. Based on the answers to those questions, I buy, hold, or sell. Prudential is a long-time life insurance company, financial services company. A lot of people depend on them, you know, the security of knowing that, hey, an individual has life insurance to take care of their family or their loved ones. And they've been doing this for a long time. They really know what they're doing. More recently, they're really transforming to have good, sustainable growth and really adjust to the macro environment, which involves higher interest rates. So the company, very well respected, I understand the business. I like the company and I like the industry. Prudential announced their earnings last week and the income statement looked really good. They actually grew their revenue by 31%, which is really good to see. It's a really good bounce back quarter and year to date, and they are profitable. So growing and profitable, very good combination coming off of a year where they lost money. The profitability from Prudential was really good in the quarter and year to date. So if you look at the overall profitability, it's really increased and made their earnings per share really look good. The overall growth was mainly in the US, where they grew their profits substantially, and they even grew their profits internationally. So things are beginning to really click for Prudential in the profit category. The statement of cash flows also looked really good. Their cash from operations was $2.5 billion, which is $1 billion more than the previous year. So it increased 41%, which is excellent. They don't really have any CapEx, so it's all free cash from operations. I believe Prudential stock is currently discounted by 28%, and they pay a 5% dividend for owning their stock. Let me take you through my analysis. It involves 4 different ways of valuing this company. First is the free cash flow method, discounting all free cash flows that I expect from the company in the future. I'm using a run rate of 5.1 billion, which is accurate to what their current trailing 12 months and expected free cash flow for 2023 is. Really no growth involved in those free cash flows. I just think they're going to be a steady state company, even though they may overachieve on that expectation. I'm going to take all the cash flows expected, all in years 1 through 4, and all the cash flows in the future. Discount those by 9%. Prudential has a solid balance sheet, but still I'm going to discount by 9% as a weighted average cost of capital. Based on that criteria, I get a value based on the free cash flows of $54 billion from the company. They have $17 billion on the balance sheet and $20 billion of debt. So the equity value is $50 billion, but the market cap is currently $38 billion. So it offers up a 41% discount because the value per share that I estimate is $138 per share, but they're currently, you can buy shares at $98 per share. I also took the book value, and those are more involved calculations, and I do those once a year. And based on the book value, the stock price is discounted by 39%. The price to earnings ratio, 7%, and then the earnings per share value based on the most current earnings per share that they reported with a PE of 12 and 0 growth, I get a 26% discount. So overall, blended 28% discount. This is a stock that pays 5% dividend. So it's an attractive proposition for my income portfolio of stocks that may not appreciate as fast as, let's say, a Meta, but they pay a dividend and are great sources of income. So let's scorecard Prudential. First, I do want to be part of the owner. I think they're doing a really nice job, the management team, in turning the company around. I think it's a solid industry, by the way. This industry pays dividends. It's pretty steady. And for my income portfolio, this is a very good holding. Debt is under control, and there's a discount offered on Prudential. Therefore, I'm going to be buying more shares of Prudential. The stock has been trading in this range over the past year. It was riding high back in the late 22 era. It was trading almost, it looks like at $110 per share. I value the company at $125 per share. So there's a pretty good gap in value that currently exists in the stock. And it has had a nice rise that followed a real big drop at the beginning of the year and then a big rise. So it's a nice V that we've seen in the stock. The stock is actually down minus 1.4%, but it pays that 5% dividend. So it's an interesting proposition at the current time. I'm glad I bought the shares. I bought around this period because I thought the stock was undervalued. I'm really glad I did so. I'm up 20% on this stock, and I'm looking to buy more shares because their earnings were positive. Thank you for watching the video. I really appreciate it. I hope you found it interesting. Do me a big favor and like the video and subscribe to my channel. I'll be recording more videos, and that way you can be alerted when I release a new one. Thanks again for watching. Good luck investing in 2023.